Hey everyone, Matt Smith with Rebellionaire here. Just wanted to share some thoughts on a recent research report that UBS put out. Now, this was not actually a particularly bullish report on Tesla. They actually downgraded to a rating of sell with a $197 price target. So, despite the bearish conclusion that UBS has, there were, I think, some pretty juicy details that I think are worth looking into and that I frankly haven't seen reported on very much. Oddly enough, except for among a couple Tesla bears. So let's take a look at the data that they provided. I'm not going to share the report because it's not for public consumption, but I'm going to share a couple bits of the tidbits that a couple bits of tidbits that they included within there. So first, the one important thing to note about the way that UBS puts out this report is they have this group that's called the Evidence Lab, the UBS Evidence Lab. And this is a group that basically runs surveys and does some other kind of unique analysis to provide a bit of numbers above and beyond just what a normal kind of Wall Street analyst would do in coming up with their own financial models. Of particular note and interest in this most recent report that they put out was a pretty detailed survey of several hundred FSD subscribers and people who had just tried the free trial. And there are some interesting stats around kind of potential take rates that we can extrapolate from there. So the first stat that they noted was that customers that have FSD, so this was a sample size of 297 customers, 62% were very satisfied and 32% were somewhat satisfied. When you look at the rest of the kind of pie chart of the results, that means that only 6% of people with FSD were neutral or negative on the performance of it. So that was, I think, a lot more surprising than I would have guessed. We all kind of experience those moments where FSD is a little bit awkward or just does something in a way that you wouldn't have done it. And I would imagine for a lot of potentially first time FSD drivers, or maybe some who just aren't as big of a nerd in following the latest developments of some of the tech as some of the watchers of this channel might be. I would have expected there to be a bit more kind of negative reaction among that crowd of people, but it seems like that's not the case. The next chart, which I think is probably more telling if we're trying to get to an overall take rate, they had respondents, Model 3 and Y respondents who had the FSD free trial, but don't currently pay for full self-driving. Now, this is an extremely important survey because this is essentially like the key demographic for people who wouldn't have bought FSD on their own, but they got this trial and they just want to try it out. I've had in my mind that this is, probably going to be a reasonably small cohort of people who opt for subscription, but this is the first time I've actually seen some real hard data. Although the sample size is admittedly small, but still it's hard data around how many people who have the subscription are going to be more prone to offering a subscription for that reason. I'm going to re-record that one. So this is a particularly interesting bit of the survey, I think, because this is Model 3 and Y respondents who don't currently pay for full self-driving, but have the free trial and are therefore considering whether or not they should subscribe. This is the first time I've seen real hard data around this. It's admittedly a small sample size, only 44 respondents, but still, I think we can potentially glean some interesting bits of information from this. So the question is, how likely are you to pay in the next 6 months? 9% of respondents said they were very likely, and 37% responded that they were somewhat likely. So when you put those two together, that's nearly 50% of people who had the FSD trial of the 3 and Y owners. Those are going to be the kind of most analogous because 3 and Y is a much bigger percentage of the overall drivers than if you were to include S and X, for example, which they did in a different survey, which I think was skewing the results a little bit. But of this, kind of your normal drivers that are in the 3 and Y camp, 46% basically are saying they're in the likely camp, whether that's very likely or somewhat likely. So when I'm thinking about the financial implications to Tesla on this, I want to try to hone in on what is the actual take rate that we can ascribe. So, I think not all the people who say they're somewhat likely are obviously going to subscribe. So if we just assume that, let's say, 30% opt to subscribe, 30% of those 37%. That would be around an 11% take rate. And then if you add to that the 9% of respondents who said they were very likely to respond, the 9 plus the 11 would be a 20% overall FSD take rate among US drivers who have this FSD free trial. That's a lot higher than I was expecting. My model that we've been using here at Rebellionaire kind of assumes a 10% US take rate on FSD subscriptions. And so to get a level that's potentially double that would be very meaningful. I want to kind of circle back to what I was saying at the beginning. The the UBS analysts, they've got all this raw data that I think is very supportive of higher FSD take rates going forward and potentially increased willingness to pay. But they still come up with a bearish take and $197 price target. So I want to just circle back on how could that be? Well, the first thing I noticed off the bat, they've got this figure in, and they assume that FSD is only ever going to be launched in the United States. So they have this chart where they have an estimated US fleet size that goes from around 2.1 million units in 2024 to 2.7 in 2025. Just a side note, they don't assume Tesla will ever get to 5 million units globally. And so when you kind of have those, I would say, quite modest growth assumptions for the overall fleet, you get to an average fleet size by 2030 of FSD eligible cars of only 6.1 million units. This ignores the fact that FSD is launching in China very soon. This ignores the fact that FSD is going through approval to launch in Europe. It's probably going to be approved in next year. So you've got two massive new markets that's going to represent, I don't know the exact numbers, but probably more than 80% of overall Tesla sales. Maybe it's closer to 90%, which are going to have FSD available to customers for the first time. And UBS just didn't even include that in their like TAM essentially of the potential FSD fleet that could have purchasers in 2030, and they're capping that FSD subscription rate at just 20%. So I think the information that they've provided would be supportive of higher overall sales than that, but it's kind of interesting that this is the level that they're coming out with. They also do what's called a sum of the parts analysis. So this is where you value the auto business on its own, you value the energy business on its own, you value FSD on its own, you value robo-taxis on their own. And the numbers that they're coming up with, I just don't I just don't understand. So they're assuming by 2030, Tesla Energy, for example, only does 113 gigawatt hours per year. I mean, by the end of this year, or by the end of 2025, I should say, they'll be very near that number just with the existing capacity that they're going to have in Lathrop and Shanghai. So that just seems insanely small to me. They're assuming 2030 EPS contribution from Tesla Energy is going to be only $1.27. I think they're probably going to hit that number next year instead of in 2030. And so then they're assuming a 2030, PE of 25 on that and discounting it back to the present to get a Tesla Energy contribution of only $18 per share. That just seems extremely kind of conservative and low to me. On the robotaxi side, I won't go into all the assumptions, but they're assuming that robotaxis deliver $9 of shareholder value on a present value basis, and that FSD, kind of as an ADAS subscription offering, offers an incremental $9 of shareholder value. So those numbers, all three of them, energy, FSD, and robotaxis, they all just seem absurdly low to me. And then they've got this core automotive valuation, which they're coming up with at $57 per share. So these numbers just are kind of crazy to me. And then they've got this catch-all, what they call a Tesla premium per share, only $105. That's like if you just do the valuation right on the first go around, you don't need to like have this weird thumb in the air thing where you're just adding essentially double the value that you came up with and coming up with a total Tesla shareholder value of $197 per share. So I think it's a very poorly done analysis, to be honest with you. But I did just want to kind of share the details in here because I do think the actual work that this UBS Evidence Lab developed around actual survey data for FSD subscribers, I think there are some really interesting nuggets in there that are actually very bullish despite the bearish conclusions that UBS takes away from that. So just wanted to share these thoughts. We are kind of revisiting our own model. Again, the sample size is relatively small, so I'm not quite sure whether we're going to land exactly on a 20% US take rate on FSD subscriptions. Maybe we might do something more like 15% and increasing over time. But then it's very important to note too that as this launches in China and as this launches in Europe, and then frankly, just as the software gets better and better, I mean, we're on the early iterations still of version 12. Um, it stands to reason that the take rate should be increasing pretty significantly over time, given the increase in performance and the increase in geographies that this is going to be launched in. So just wanted to share those couple thoughts. If you're interested in more, check us out at rebellionaire.com. I'm Matt Smith. Thanks for watching.